Most people hear the words credit score all the time, but don't really understand what it means or why it matters. And that confusion is exactly why so many Americans struggle financially without realizing it. Because a credit score is simply a number that tells banks how risky it is to lend you money, and it ranges from 300 to 850, with higher numbers meaning you are more trustworthy in the eyes of lenders. This one number affects whether you get approved for credit cards, car loans, apartments, and even mortgages, and it also determines how much extra money you pay in interest over your lifetime. So having a good credit score can save you tens of thousands of dollars, while a bad one can quietly drain your finances for years. Your credit score is mainly based on 5 factors, and the most important one is payment history, which means paying your bills on time every single month, because even one missed payment can hurt your score more than most people expect, while consistent on-time payments slowly build trust. The second big factor is credit utilization, which is how much of your available credit you are using. And this is where most people make their biggest mistake, because using more than 30% of your credit limit signals risk to lenders, even if you pay on time, while keeping your balances low shows discipline and control. Another factor is the length of your credit history, which means the longer you responsibly use credit, the better it looks. So closing old accounts can actually hurt your score by shortening your history. New credit applications also matter because applying for too many cards or loans in a short time can lower your score temporarily and make you look desperate for credit, while having a healthy mix of credit types, like a credit card and a loan, helps show you can manage different responsibilities. The good news is that improving your credit score does not require being rich or perfect. It just requires consistency, patience, and a few smart habits like paying bills on time, keeping balances low, avoiding unnecessary applications, and letting time work in your favor. Because when you do these things, your credit score naturally rises over time and opens doors to better interest rates, easier approvals, and more financial freedom, which is exactly what Simple Money Fix is here to help you achieve. So if you want to fix your credit, avoid costly money mistakes, and build a stronger financial future step by step, make sure to subscribe and keep learning.